What we should do is speak to some large global experts about how is it that they are approaching investing across the world, more specifically the Asian and the emerging markets and India. Bill Maldonado, Chief Investment Officer, Asia Pacific at HSBC Global Asset Management, joins us right now on the show. Bill, great having you. Thanks so much for taking the time out. And you're joining, of course, BloombergQuint in India. What is your thought? What are the conversations with clients currently? Because what we've seen over the last couple of months is that outflows happening in the emerging market pack. India is not alone. A bunch of Asian markets also in that basket. Is this a trend that is likely to continue? What are you advising clients to do?
Well, we're very positive on the Asia region. I think we're sitting at a real sweet spot today for the Asia region. We've got synchronized global growth for the first time in a long time. US, Europe, UK, China and Japan are all growing at or above trend rates. And that's very positive for Asia. Asia is still a region that's very geared to trade, to exports, and that's really helping the region. On top of that, Asia looks very undervalued or meaningfully undervalued relative to developed markets, relative to the US, and relative to bonds and credit. So a lot of positives here. The really big story for us is that earnings are also picking up now. This year is the first time that we've been seeing earnings upgrades and beats for the first time in a long time. And if you look at profitability, if you look at ROE, it's the first time in many years that we've got a meaningful pickup. That's going to make Asian equities even more attractive. So our advice to clients is to be invested in the region, to think about equities in the region as being very positive. And I would just comment on the flows that you've mentioned. I don't really think that anything material is happening. There's always inflows and outflows at the margin. I don't think we've seen any kind of positive or negative move on that front. Flows have been very weak into the region for a long time with, as I say, a bit of oscillation around that very, very weak overall trend. And what we'd hope is that those would pick up over the next 6 to 12 months. If we get that pickup in flows, that reinforce all the other things that I talked about and could make the market performance even more positive.
You would expect flows to pick up into EMs and Asia despite what's happening in the US as well. October could see the first shift away from what's been a 10-year policy of the Fed, and December we could possibly see a rate hike as well. You would believe despite these two events or this one large event, we could still continue to see increased flows into the Asian region and the emerging market region?
I would think so. I would hope so. I mean, the reduction, the trimming of the Fed balance sheet normalization and the potential for a rate hike are very well priced into the market at this point. There can't be anybody alive today who hasn't thought about it, who hasn't heard about it, discussed it. It's very well priced into markets. I don't really think that's the key driver. I think investors are looking out a bit beyond that, and they're thinking about how sustainable is the global growth that we're seeing. Is the US going to continue to accelerate? Is it going to stay more or less where it's at? Or are we actually going to see growth come down to trend rates of growth and perhaps below trend rates of growth? I think that's what's really important for investors today, and certainly what we're very focused on.
Bill, I know we're running short of time with you, but my last question, how closely do you look at India? And if you look at it really closely, does India stand out as a key market to invest in? And the verdict out there is split right down the middle. Which camp are you on and why?
Yeah, well, we have a large business in India. We have a team in India and a team offshore investing in India, both in equities and fixed income. So it's a very important market for us. And we've been there a long time. So we really like India. We think there's a lot of really good companies, many of which are these days global companies, which are headquartered in India, managed in India, but which really are not pure domestic companies. And of course you have the the pure domestic players as well. India, for us, holds a lot of potential in the future. If the government can continue with its reform agenda and we continue to see progress, I think there's so much upside for the Indian economy. Today, Indian equities look a little bit expensive on average because they've been performing very, very strongly over the last 12 months. We can still find stocks which are not overpriced in our view, which are still not expensive, but we have to look harder and harder. We're a very valuation-focused investor, so that's getting a bit tougher for us. But we love the underlying picture. We think it's extremely positive, and we really, really believe in the long-term progress that India can make.
Okay, Bill, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective.